live. All right. So if I'm doing this right, which I think I am, I'm going to show you in the stream. So now you and I will both be in the stream. There you are, side by side.
Perfect.
And I can go like this, and I can go like this, and I can go like this, and I can go like this. So if I want to make you more important to me, then I can do that because you look better than me right now.
I don't know about that.
So this is my home office, or I could do a frame. So, and I understand this is Be Live, you guys, and Jason is doing this with me, and poor Eric had to go through a lot of pain for me to be able to do this without any problem. So now we're good. And so we're going to talk a little bit about what's going on, right? So you're at work, aren't you?
I am.
So just for people that are on my Facebook that don't know who you are, you want to introduce yourself?
Sure. I'm Jason Jenkins with Union Home Mortgage. I've been lending for almost 24 years now, and I've known Michelle since her first or second day in real estate.
Yeah, that's real. I love telling that story because you solicited me and helped me get started. We used to do home buying seminars, right?
Yeah.
Yeah, because when I moved here, Mike was headhunted to this area with Bradford White, and we didn't have family, friends, or nobody here. And I thought I wanted to be a stay-at-home mom, and that didn't work for me. And my kids are very thankful that I found real estate. And so, and then the minute I got my license, you said, I'll help you grow, and you did, and you've been there ever since. So it's pretty cool. So you're a lender, and you're considered essential, which, by the way, I hate that word, but you're essential because I'm non-essential right now, but you're essential.
Yeah, I think that's funny, but I mean, it's not funny, but I just think it's like you who starts the process is not, but me and the inspector and the appraiser are. So that's.
Well, I have a little bit of a problem with this because now they just made the home inspector essential.
Right, that's what I'm saying. So everybody basically, but the person that starts a transaction, which is you, is essential.
So which makes no sense to me. You know what? Before the home inspector was allowed to be essential, I understood. I thought I understood why she was doing what she was doing. I thought she didn't want to stop any deals that were in the process.
Right.
And I thought, well, that's really kind of her. You know, if you've already had your home inspection and you're just waiting to close, you can still close and you can still have the process. But, you know, the home movers weren't essential. You were just going to have to delay your move. Mm-hmm. But you could finish the closing, which was really nice for realtors that are very, very dependent on that commission check.
Right.
So I thought that was really cool of her. And then she made, you know, our governor, I'm sorry, I'm saying she, that's disrespectful. Our governor then made home inspectors essential because supposedly they're very important to the home lending process, which is not true. But she, you know, the only thing that I know that's true there is that VA requires a pest inspection, right? And if it's well and septic, then they require, I don't even know if they require septic, just well and water, right? Mm-hmm. So those would be essential to the lending process because it's a requirement, but home inspections are not a requirement otherwise, right? Nope. So for whatever reason, our governor decided a home inspector is essential. So my problem is that I'm starting to see a lot of FSBOs for sale by owners coming up on Zillow because now they can sell and everybody can do what they're doing but we can't. So not only did she make us stay at home, she's hurting our future revenue in my mind. And so because, you know, people are still selling, they're just not selling with us.
Right.
So I needed to find out a way to do this because there's a whole lot more to selling real estate than popping your house on a website, right?
Correct.
And so I know you'll work with anybody, but just, you know, for the record, is it easier to work with a realtor or someone that's, you know, selling their house for the first time by themselves?
Oh, well, without a doubt, it's having an agent because what happens is when you're not involved, then that first sale by homer, they think I play realtor role, which one is illegal for me to give advice on, but it causes more work for us. And then if they don't have a title company, you know, if they pick their own at some place I've never heard of or whatever, I just know the transaction typically is terrible when we're not dealing with agents. It doesn't flow nearly it's smooth, not even close.
Well, the title company charges more money for sale by owner.
Mm-hmm. Yeah, because they get stuck doing more work. So yeah, I mean,
yeah. So I've been brainstorming with a bunch of other agents from around the world because I'm a certified residential specialist, which is a CRS designation through NAR, National Association of Realtors, and I believe only 10% of the realtors nationally are CRS. And we did a Zoom meeting. I haven't done a Zoom meeting in such a long time. And so we did a Zoom meeting yesterday, and we were brainstorming, and we were trying to figure out what we could do. And I came up with ways to be able to list somebody's home, get pictures and video up and get it all up there, and be able to list their home and still have all the guidance of a realtor. So I'm really happy with that. So I know that I can list. What are you doing differently in lending to help people follow the rules?
Yeah, I mean, very similar to what you're talking about. We're doing a lot of go-to-meetings or Zoom, or I've done Facebook Live, just kind of Q&As. But yeah, I mean, it's just a different world. We're trying to adjust now because we are essential. We are allowed to have some closings take place in our office. We've had some customers who, weren't comfortable having a notary come into their house, which I totally understand. So we have had some closings in the office, and obviously we're just doing everything we can, cleansing everything, wiping everything down. So it is a little different way of doing business, but I mean, we are still doing it. I mean, rates are, and I'm sure you'll touch on this later, but rates are phenomenally low. So we have a lot of people still trying to refinance, but we do have people buying houses. I mean, you're seeing
a lot of people are asking me, like, should we buy a house now? Should anything's going to change? And I think the interest rates are so low. If everything else is working for you, if you're not in a position where you might lose your job, because it's really weird how this is all working out. Some people are not working, and some places are hiring more people,
right?
Depending on the nature of the business. So there's still going to be buyers out there because of that, right? And So are you still taking applications?
Yeah, we're still taking applications. We just have to be very careful with, some people are on a what's called a furlough, or they're actually laid off. That is an issue, just like it would be in any other time. But like, for example, my wife's company kept everybody on, all full-time employees, but they reduced their pay by 20% until we're through all this.
Okay.
We can still use that. We got to qualify off of that. But yeah, to answer your question, we're still taking applications. Now this week has been mostly refinance applications because, the rate dip. But, over the weekend, I had 2 or 3 new people still inquiring. I have a video after this, we're done at 1:00. I have an application that's for someone buying a new house. So it's still going. It's definitely slowed down. It's just, again, we have to be careful how we do it. We have to respect the rules that are out there, make sure we're not meeting in this and that.
And if people are going to sell their home and they're worried about the appraiser maybe coming through their house, and so many people going through the house, some homes qualify if the buyer qualifies. Some home qualifies for an appraisal waiver. Is that correct?
Correct.
You want to touch on that a little bit?
Yeah. So and it's not just the house, it's the house, the client, all this different items come into play. But yeah, we can get a property inspection waiver. We're getting them in about 54% of our applications right now. So it's a pretty good clip. And then what Fannie and Freddie have done with all the craziness going on is they've allowed where they will accept now a drive-by appraisal for certain transactions, so that the appraiser does not have to go into the house. They can take exterior photos, not have to go in there, just for safety reasons. So we're doing the mortgage industry, which typically does not adapt very quickly to anything, is actually being very proactive, trying to make it so that we're not having a slowdown. We don't want customers to miss out on these great rates, whether that be with a refinance or with a purchase. So we're just trying to do anything we can to, still make it happen. And yeah, the property inspection waiver is very handy. And sometimes, like I said, we can just get an exterior only appraiser, which means no one has to come in contact with anybody.
I was listening to one of our appraisers do their live show, and he said on certain properties, he can just they're always going to have to do the drive-by, right? Because in 2008, when our market crashed, they were making up parcel numbers and homes didn't really exist. So they were lending on stuff that wasn't really there. So they're always going to have to do a drive-by. They always have to verify there is a true structure, but they will drive by. And then I understand also, if you have someone that's high risk in the home, they can conceivably do a FaceTime walkthrough with the homeowner. Is that correct? Yep. So there's a lot of ways that if you're very, very nervous, like my husband and I are high risk. So I've been self-quarantined before she made it mandatory because I don't want to be out there. And I would be nervous of people coming in my house. And so that's, so you could do it that way. There's still people that need to buy. There's still people that need to sell. And so I am an advocate for real estate being essential and real estate agents being essential, because life didn't stop. That didn't stop people needing to sell, didn't stop people needing to buy. I have someone right now that needs to sell because he has a job offer in another state. So he needs to sell and he needs to go buy because he needs to be able to take this job. And he's lucky to have that job. Like people are lucky to have a job right now. Right. And so you and I were talking about rates, and we were talking about how FHA had increased their rates for people that have a challenging score. Can you talk a little bit about that?
Yeah, and it wasn't necessarily that FHA as a whole raised their rates. The lenders are who kind of dictate what the rates are. And what happened is I'll give you the quick version, is when they talked about the 6 to 12 month delay on your payments if you are having struggles with that to lenders. So obviously we all want to take care of people if they can't make their payment. And what people have to understand, though, you still have to make the payments, just they're deferring them and you're not getting hit with credit lates and all that kind of stuff, but you still have to pay it back. But the problem on an FHA loan or any government loan is a servicer such as Union Home Mortgage. If we have your FHA loan, we're still on the hook for your taxes and your insurance to make those payments for 6 to 12 months, which is a huge amount of money. I was reading some stats that if in April 25% of Americans don't make their house payments, it's going to cost the mortgage industry up to $40 billion in fees for taxes, insurance, etc. So because of that, the FHA interest rates went up with most lenders so that they could make sure they're making their service premiums on those FHAs if they're going to take the risk of taking them on. So, but where you were going with that is it's mostly though with the credit challenged buyer, because it's a higher risk loan. So if you have a 740 credit score, it's like a conventional, you get a better rate than someone who has a 680. And FHA has gone to that more so than they have been in the past. So what we're noticing is, yes, the FHA loans definitely rates aren't as juicy as they were post COVID-19 or excuse me, but they're not as bad as what you've heard in the media. It's like, oh my God, they're like 6%. I'm like, no, maybe it's some lenders. Every lender has their own thing. I know some.
I heard as high as 5%, but I don't know. But I haven't heard 6.
Yeah, in 5% is definitely there. But what we're also seeing too is like what you're gonna see a lot, Michelle, in going forward. I think until these things calm down, if anyone's doing a government loan, they're gonna go back to the old days of paying a point. They're gonna pay a point, which what that means is higher closing costs. It's 1% of loan amount, but that'll get you back into a rate. I had to give a guy FHA yesterday because it's the only thing he could do because of credit issues. But we were able to get him 3.5%. He had to pay a point though, so it was not like
he has to pay a point. But if you have a savvy realtor, they can make that part of the prepaids and get the seller to pay for that. That's correct, right?
That is correct.
And I will tell you, my daughter, who works with most of our buyers now, Amanda Gordon, she gets a lot of people to pay closing costs and prepaids. And buying a point is a prepaid, right?
Yeah, well, prepaid closing costs. Yeah, it's either one. Actually, technically, the prepaid is just taxes and insurance, but you can term it that way. But the seller concession you're referring to can go to closing costs or prepaids.
So even though we're going to charge a point, if you have a savvy agent, you're still not paying for it, and you can still have it. So so now I understand. I keep hearing a lot of fake news about these rates and what's happening with loans, and so that's why I wanted to bring you on here, because I know you know your stuff, and I wanted to clear all this up.
Yeah, well, that's the thing, Michelle. There's a lot of bad fake news, but it's also some of it's, I guess I wouldn't say fake, it's true, but it's lender by lender. Like some lenders, like there's some local lenders here in West Michigan who are done, they're not doing government loans. They're done with Michigan, they're done with government, VA, all that stuff because of the risk. Still doing conventional, or they just drove their price so high that no one's going to want to go that route anyways. But there's a lot of lenders that are upping their credit scores. Like we have not done that as a lender yet. Like our minimum is 600 in FHA, 640 for conventional. But there's many people, especially banks, who have gone, we're 660 or higher. And that's because of that price break for interest rates, but they just don't want the risk. So you are seeing a lot of that. It's just what I would just say to you or anybody who's seeing this, or if you see something from a lender, ask somebody else. Don't take it as the gospel because one loan officer said it. I got an email yesterday from a realtor who said, "Is this true?" And it was not even close to being true as far as industry whole. It was true for that lender, but not as an industry whole. So
that is probably my biggest frustration. I'm glad that you brought that up because we don't steer people. If someone doesn't have a lender, we send them to you. We send them, they'll say if they want our recommendation. But if they already come in with their lender, if I have been working with somebody and they go to a lender, I don't want the lender to say, use my favorite realtor and dump the person you've been working with. So I'm very respectful to who they've chosen to work with. But the one thing I do is I say, I want to see your estimate sheet. I just want to make sure everything's okay. And let me see your estimate sheet. And I cannot explain enough how their friend is helping them by charging them so much more money. So I think if you have good credit, you only owe it to yourself, no matter if it's your friend or not your friend. You need to make sure that that you're getting the best deal possible, because this is a long-term loan, so you want to make sure of that. I heard it was a story a long time ago. A plumber had said one time, I never give my friends the best price because they never shop me. And I think that happens in lending world all the time. And sometimes people don't want to listen to me. And all I can do is give them my advice. And if they decide that they want to do that, then, but it hurts my heart to know that I could have saved them $1,000 or $500. It hurts my heart. And so would you think it's wise if someone was thinking about buying a home before this COVID-19 thing to go ahead and start the process with you?
Yeah, I mean, the other thing is too is we don't know when this stuff's going to end. We hope it comes to an end very shortly. But a pre-approval through most lenders, and I don't want to speak for everybody, but for us, it's free. So the only thing you're out is time. So if you get in, you let me put your credit, give me all your information. We ask for a lot of stuff, but you get it all to me. Things don't come to fruition, no big deal. But if they do, and that house is there that you want to pounce on, and that rate that day is unbelievable, I can hit a button. If you don't do that, and then you have Michelle find you this awesome house, which Michelle wouldn't do unless you were pre-approved. Well, let's just say in this example that didn't happen. And then you want the house, and you want me to click the button. I can't. I got to have all this stuff in. And that's a big, you've heard me talk about it on Facebook Live a million times, but that's the biggest thing is people think it's just easy for any lender to go, oh yeah, you want that rate? Sure, boom. No, that's not it. It's the same thing with pre-approval. I want to have all your stuff in so that when you find the house you want, I give you a raving letter about how awesome you are, but this other agent's going to know that, wow, this person's ready to go. And hopefully they know me, maybe they don't, but if they don't, they know that Jason doesn't give a pre-approval that is not a pre-approval.
Well, you're like me, you've been around a long time, so a lot of people, if they don't know you, they know your name. Right. And they know that I always say your paper's like gold. And so we win offers with your pre-approval not being the highest price because they know the deal will go well. Right. And so, because there's a lot of people, and I think you made a really good, valid point that just get the pre-approval out there because you never know when that right house is going to come along. It could come along next week. This is not, this whole COVID-19 thing is not stopping everything. And I still see homes. I looked yesterday and there was 73 homes that went pending yesterday in West Michigan. So they're still selling, they're still, and then we called a couple of people and they're getting full price or more for their homes. So it's not reducing the cost of the house as some people would have you think. We're still a limited inventory. We still have more buyers than we do sellers. It's still a seller's market. And if the house is priced right, we're getting what we need for that. And so I think you should get pre-approved. One last question. I see that we're running almost 20 minutes. How long is your pre-approval good for?
I was just going to say, can I tell you how long our pre-approval is good for? It's good for 90 days. And that's what it should be with most lenders. And the reason that is after 90 days is your credit report. We just have to pull a new one. So everything's still valid. It's just for a full 90 days, you're fully good. It's just what happens is you have to close the new loan before your credit report expires. So worst case scenario would be it's day 91. We have to get a new report. Hopefully everything stayed good. But yeah, it's good for 90 days. So that puts us well past, hopefully, what brings us out of our shutdown and we're back out. We're into a healthy spring market. So again, there's no reason to do it now. And anybody who's watching this, I hope you're still working, but if you are, you're probably at home and you probably have a little time in your hands. It'll take you 20 minutes to get a pre-approval done. Honestly, if you can fill it out and get me your stuff, I can have you pre-approved in 24 hours. So, and it's all about questions, but that's not where you asked me 90 days, but yeah, we can do it quickly and get people done and be ready to roll.
Okay, thanks, Jason. Thanks for playing with me on this. I think we were very successful. I looked on Facebook and we have followers, and there's no weird sounds, and I think we're good. So,
all right. Thanks for having me.
How to get a hold of you?
Yeah, you can get me in the office, 616-328-6708, or email me at jjenkins@unionhomemortgage.com.
Or just reach out to me and I will connect you. And you guys are on my page, so you know who I am. Michelle Gordon, 616-443-0596. Thanks, Jason. All right, bye.
See ya.